Welcome to Business Line's State of the Economy podcast, where you'll find insight, analysis, and the story behind the numbers.
Hello and welcome to the State of the Economy podcast by Business Line. Here we cover the real estate trends for the sector. We have with us Mr. Sudarshan Lodha, the co-founder and CEO of Strata. Strata, as we know, is India's largest fractional ownership platform with an asset under management of over 1,800 crore. It has 3,000 plus investors. Mr. Lodha, along with Priyanka Rathore, are the co-founders of Strata. We have with us Mr. Lodha. Welcome to Business Line podcast, sir.
Thank you, Abhishek.
Sir, for the listener, a quick run through of what exactly is fractional ownership in commercial real estate, the segment you're operating, and what exactly does this mean?
So what is a stock market right now is nothing but an exchange platform where there is a fractional ownership of companies you could buy, via the exchange as such. So when you buy an HDFC stock, effectively you're a fractional owner of the bank per se. So what IPOs have been able to do, what listing has been able to do, is for large companies which are valued at 20, 30, 40,000 crores and nowadays much larger. This is a great way for them to go and start having retail participation or fragment the company in smaller pieces so that multiple people can start owning a piece of that. A similar nature is what we started by fractionalizing real estate, where we said, okay, let's do an IPO for a building in some sense. And say, okay, there are multiple owners who would want to buy, but today there's no platform or an exchange through which these guys can acquire these rent yielding marquee properties, which they probably see on a day-to-day basis, or they probably work in those offices, etc. So in a nutshell, that's what we do. How a share of a company is broken into and is available as fractions for people to own. We do something similar for real estate, predominantly commercial real estate, which is rent generating in general, so that there's a monthly cash flow plus an annual appreciation which one can target in general for their investment.
Okay, two quick follow-up questions on this. One, can I invest as an individual investor, or is it something that a company has to invest in? That's one. And two, how exactly does an individual investor or a single person gain from this? How does he earn?
Sure. So today there is no restrictions on who can invest. You can be an individual partnership firm, HUF, trust, AIF, no restrictions as such. You can invest in any form. If you're an NRI, you can invest from your NRO account as well. Post September, you can start investing in dollar investments as well. So that, now the government is allowing, even foreign investors and foreign institutional investors to also start participating into this platform per se. So hence anyone and everyone under the sun can invest. Right now, we just do not accept money from minors in general, anyone below 18, but anybody else is absolutely free to invest. In terms of how the investment works for an investor, there are two forms of business. Today, what we do and what SEBI is regulating, a month later, where we're going to come into the new SEBI regulatory framework. Today, when an investor invests, he gets share certificates of a company which is going to own the property. And whatever rents which get generated gets distributed to the investors on a month-on-month basis. And whenever we sell, whatever is the value realized, that will be the additional capital appreciation what an investor would make on his investment. And he'll get a return substantiated towards the same as well. So net anywhere between a 13 to 16% on an average is a year-on-year return, which one can expect. And 8-9% in terms of yearly returns, which will come in the form of monthly rents to them. And the other part is going to be of capital appreciation, which is going to be more ballooning, which is going to come only at the end when these guys look at exiting their investment. Just like any other real estate investment, it's not a short-term product. It is a long-term product. You have to stay invested for a 7-10 year kind of a mindset. Only then you'll take the benefit of the compounding effect. We hear from our parents, we hear from our friends who say, I bought this house in 2000 for 1 lakh rupees, it's become a crore today in 2024 is predominantly because the compounding effect has led that to play. I'm sure in 2010, they would have got probably 1 lakh or 10 lakh and they say, let's exit the investment or whatever. But because they didn't exit is when the compounding effect continued playing for them very, very well. That's a similar nature in this product as well. At the end of the day, it's a real estate product, just that there's some financialization in some sense to make it more accessible to investors is what it has been formulated. Uh, like I said, going forward, when we come under a new regulatory framework from SEBI, this will be you can buy these units not via a platform, but you can directly buy these units via your stockbroker. So you can go to a Zerodha or an Angel One or an Upstock or a Grow, wherever whatever you use. You can whenever we do any list any property, it is like an IPO in general. There'll be a SM REIT new scheme launch, which will be specific to a property, which will have its return and everything else crystal clear made established to the investors, and then they're gonna invest into something, and in return they will get units allocated in their demat account, which will be sitting in the demat account, and again the monthly rent, everything remains the same, nothing changes in there.
Like in case of a share account or a demat account, I can exit that account or close it completely at whatever market value. Is the similar option available when they do so in commercial real estate?
As well, yes, absolutely the same. You can use the exchange to liquidate your investment when you want to exit. Having said that, if it's not something that you invest and you expect your money to get doubled next year. It's not going to happen. You have to treat this as an alternative fixed income slash hybrid equity instrument in some sense. It's a quasi debt and equity. You get debt returns in the form of rents every month, and your equity returns, which is your alpha, which you make on exit. So hence it's a quasi product. Hence, from a investor mindset and an investor uh, the perspective or the understanding one should have, it's equal to you buying real estate, just that it has a financial color to it, with more liquid available on demat and listed on the exchange, etc. Having said that, it's a long-term product. If you come with a incentive and a mindset that, oh, I'll double my money within a year, 2 years, this is not that kind of a stock market investment in general. There are multiple small cap, mid cap where you can play your luck. This is a safer product comparatively, uh, where you're investing and getting rents. There are premium tenants who we have currently and we'll have in future who are owning the marquee buildings in general, and accordingly they'll continue to pay rent.
One more follow-on question on the same lines is, what is the difference between a fractional ownership and a REIT? Because what REIT is something we are accustomed to right now as an investor. So how does this play?
So fractional ownership is also now being coined as a new word under the REIT framework. It's called the SM REITs in general. And then there are these larger REITs. The difference between SM REIT and a larger REIT is twofold. One, SM REIT will be probably only a property specific listing. It can be, an entire building, let's say leased to a Puma for that matter, or a building leased to Swiss Bank or an Amazon XYZ. Vis-a-vis a REIT which can have 20, 30, 40, 100 properties, and you're going to get blended return of all the properties per se. So it's like you taking a bet on an HDFC stock directly vis-a-vis a mutual fund who's taking an HDFC stock exposure along with 20, 30 other stock exposure. So it's a call you have to take vis-a-vis what you feel is beneficial for you based on your long-term investment plans in general. That's number one. Second, because it is specific to a property or a micro market, so you know the risks and rewards more importantly. Vis-a-vis other REITs which exist today, they have properties all across India, in Bombay, Bangalore, etc., etc. So you're taking multiple markets, multiple micro markets risk as well collectively. Again, it can be a blended and a risk which can be averaged out as an investor, but this is more specific versus this. And in general, I think the returns might be a little better than what a larger REIT would eventually have, because REITs have hotels, REITs have solar assets, REITs have offices, they have under construction offices as well. They have loans taken on the buildings, etc. So there are a bunch of other things which are part of the larger REIT story, which in the small and medium REIT, which is there, will not have anything of that nature.
Um, like REITs, who are supposed to give a certain percentage of their earnings monthly or quarterly as dividend distribution, does the same apply in case of fractional ownership?
Yeah, absolutely. So SEBI mandates to do every minimum quarterly per se, but that doesn't stop us from doing monthly as well if you want to. Just that I think everyone will adopt for a quarterly arrangement purely because every time you do distribute rents and etc., it's a costly affair because you have to now use multiple intermediaries, etc. We are evaluating those costs and figuring out how to bring it down. But otherwise, on a net standpoint, quarterly is the minimum payout what you're mandated by law to do it, similarly to what the REITs have to follow.
How big is this fractional ownership market size in India today when it comes to commercial real estate?
You'll be surprised. We started out in about 2020. As such, today we manage just a little over 2,000 crores now in terms of our AUM. Clearly, as a market, it has taken up, and I think collectively should be about 4,500 crores per se, where we have a lion market share in general. And there are several other companies who are trying to do this, which is why the regulator also felt there's a need to regulate this industry, and a new regulation came in effect from March 8th, 2024.
Okay. So, and in general, how is the demand on a monthly basis? How does it play out? Is there a demand per se, like 10% growth, 20% growth, 30% growth? Is there a number you can pick, like generally is pegged for leasing in real estate or for home sales?
So, very difficult to give you a demand per se, right? Because we are very nascent as a platform, or the industry is very nascent in general. But if you see, let's say, our growth in terms of us reaching 2000, in the first year, we were at close to over 110. Then we added 400. Then we added about 600. And just last year, we added about 900 on, right? So if you see, technically, we've also been growing like a 50-60% kind of an average year on year. Obviously, the first year to second year was significant because it was a 400% growth. But otherwise, on an average of 40-50% is a considerable growth, which we've seen, and I'm sure everybody else in the industry has also seen. But having said that, we look at this sector very differently as such that in a country like India with a significant affluent investor base available as such, we feel that every year, and this is basis the RBI data, that close to about 3.5-4 lakh apartments get sold. And that's what the numbers there was last year. And about a 50-50 stretch, 50% was investment and 50% was end use. So you can see close to about 1.7 to 2 lakh crores kind of an apartment were bought by Indians for an investment, which makes probably 2-3% residential returns, right? Even if you peg it, apartment for 1 crore of a rupee, you're talking about 1.75 lakh crores to about 2 lakh crores of money being parked into residential real estate to make 2%, 3% rental, probably appreciation also, etc., right? Which is also quite possible. And at least the last 2 years, people have seen significant appreciation in residential, which as well was a flat market comparatively. So having said that, if we even peg a 10% allocation to commercial real estate, which is far more better, more lucrative, better tenants, vis-a-vis a residential where it can be you or me as a tenant. We are not grade A, but the companies we work for are grade A. Because Abhishek makes money, he will eventually go and buy a house for himself. Vis-a-vis a company who decides to take an office, there are multiple parameters a company will choose before it makes home. And then it's very difficult for them to displace unless they are running out of place or they're shutting down or trimming down their operations or etc. Right? So having said that, from the growth trajectory standpoint, doesn't look like any of these offices are moving out anytime sooner. In fact, taking more and more space, and hence people would love to take more exposure to CREs. At least our hope and expectations as such. But that's not the only allocation we target. We are targeting a significant fixed deposit allocation, and I believe everybody is going after the fixed depositors. Like your mutual fund industry is going after them left, right, and center with the amount of SIPs happening. Likewise, I feel over a period of time, Strata or the SM REIT product, what we will be rolling out will be part of one portfolio in the affluent Indian segment for now. And once SEBI reduces the ticket size further down, I think it can be a part of a much larger spectrum of Indians who want to own these rent generating assets.
And in general, for your case or for the industry, who are the investors per se today, right now? Any profile you have put out of the individual investors who are making investments in fractional ownership? And what is the average holding size or average investment value?
Sure. So our minimum is 25 lakhs today, which SEBI is bringing it down to 10 lakhs, like I said, from September onwards once we get a license. But having said that, the kind of investor base we've seen are predominantly professionals. They form about 70% of our base. About 10-20% are family offices and business people, and about 10% are professionals like your CA doctors, lawyers, etc. So that's the base which we are talking about. Very interestingly, close to 30% of our base is NRIs who are deploying capital with us on a regular basis as well. So that's a very large segment of audience who want to invest into the Indian commercial real estate or real estate market in general. But larger problem for them is asset management, like who's going to take care of the property, etc., etc., and all the nuances of an asset management. So hence we've seen a big significant uptake in the whole NRI audiences comparatively as well over the years in general. But I generally feel, and we use this in a more colloquial manner internally, at least for that matter, we feel that the Zerodha audience is my clear audience who will participate because these are audiences who do not have wealth manager or wealth advisors in the right way to advise them from an asset allocation and everything else standpoint. And for them, most of them, at least, we've realized, especially after talking to several investors, have 70-80% of their net worth parked in real estate itself. So we are just trying to take a piece of that from them and saying, why don't you invest into better rent generating assets, a physical asset? You can go see for yourself. You can see the tenants paying rent, and you can take a call accordingly. You don't have to. The good thing about this product in general is it's a call you have to take vis-a-vis deal by deal. You don't have to take it's not a mutual fund where you invest and I pro rata put your money across all your properties. So you can choose the properties you want to invest into and get your returns accordingly. So it's going to be much more uh, informed decision making vis-a-vis a blindfold investment which you're going to make eventually.
And right now, which are these developers who are open to such a fractional ownership concept? Any such names can you share?
So I think every developer in the country would be open. He gets a liquidity option, right? Whether he wants to sell it to a fund or he wants to sell it to an HNI to us, it doesn't really matter to a developer per se. Many times we've even encountered properties which are from a developer who sold it to an investor and the investor wants an exit now. That has also been a situation. There have been a situation where a fund wants to exit because the fund has achieved its timeline and they want to call it quits and they've come to us and liquidated their investments as well. So the seller can be anybody. There have been instances where there have been corporates who have also sold their assets to us. Some have even done a sale and leaseback, or some have just sold and they walked out as well. So, it's a seller universe is very large and of different types. Whoever wants money will be out in the market to sell the asset, irrespectively whether he wants it for himself or not.
So at one point you end up owning these assets as a player in this.
Yeah, I mean that's how we get ownership, right? And that's when we'll put money. So we buy the asset. It's in a company's name which is floated as such, and their only purpose is to own that asset and enjoy the rent out of it, nothing else.
And have you exited any such properties?
We've exited two. We've exited two as such. One we had targeted to achieve about 12 and a half. We made 15.5. And one we're exiting as we speak right now, where we had again targeted about 13. We're making about 15.5, 16% in that particular case. But on an average, these have been two outliers, I would say, but on average, 14 to 15 is something which is remotely achievable by most of the properties in general.
Which brings me to a different question right now. Overall, how do you see the commercial real estate market play out in India? Are GCCs open to invest? Would you see more such assets coming up on the block?
Oh, significantly, Abhishek. You'll be surprised to the amount of GCCs who are looking at entering India as such. And people's perception about commercial real estate, unfortunately, only about office assets. There's more to CRE than just office. There is warehouses, there's industrial assets, there are retail assets, there are hospitals, there are hotels, which you could also own. And we've done all of these via our platform in general. So spectrum of CRE is significant as such, and hence accordingly investors can look at diversifying their portfolio also significantly.
And do you require financial support, or as an investor, both from your point of view as well as from an individual investor point of view, is there a financial support or loan component that can be an investor point, or for an individual investor point of view, can someone take a loan and invest in it, in your assets?
See, so I'm I love debt, and I think that is the best way to build wealth. Having said that, there are two ways in which one can take debt. One, SEBI permits us to take debt on the company level itself, close to 49%. So automatically your wealth will get compounded because you'll get equity returns for 100%, whereas you put only 50%. So that definitely is a great wealth uh, compounder in some sense. But otherwise, for your units, today there is no debt available, but post September, once it gets listed and rated, there will be some debt available for you to look at investing. Again, for those investors who are mostly investing with us, want a passive rental income portfolio for themselves, and hence they typically don't take debt in general because your returns are about 8-9%, and your debt cost is also going to be 8-9%. So you're only playing for the appreciation story in general. So I would urge investors to typically not take debt for making investments with any of the REIT platforms in general, but use the units of the REIT to take as a margin call for anything else in future or whatever. That is still okay because treat this more as your alternative or a proper real estate investment in general, right? So there's more secured, more stable, no chances of capital being eroded, at least. Rents can come or not, tenants can come and go, but your asset value is not getting depreciated significantly at any point of time.
And this brings me actually to my final question, perhaps. Uh, so we have been talking about SEBI guidelines throughout the conversation. My last question absolutely is, with the SEBI guidelines coming in, can you put it in a nutshell what it means for an individual investor, like, let's say, me or someone else listening to this podcast? And how does this market change right now? Does it become easier, difficult? Overall, how does this market structure change with this? And what would exactly be the nature of these sort of regulations? I think it's September onwards, right?
Yeah, so regulations are already on, but you can see probably the first listing coming up in September, October, at least for that matter. There are still certain finer things which the regulators working on to ease of business is being worked upon. But having said that, once it's done, what we used to do will now migrate to a regulated environment where there are people at SEBI who are going to govern this industry uh, as well and going to be involved on a regular basis, to improvise and keep improving investor protection over everything else because that's the job of a regulator at the end of the day, and also help grow this industry because there's a potential for us to be a very, very large industry. There was this one meeting which I attended with one of the regulators who told that there are close to 1,300 AIFs in the country. AIFs are alternative investment fund, which can be a real estate, startup fund, venture fund, hedge fund, all these kind of funds. Collectively manage about 6 lakh crores in India as such, and that's a large sum of money as such. And there are just a little over or little under 30 REITs in which today in the market, and they manage 6 lakh crores in the country today. So the ability to make this large, or in terms of financialization of real estate and infrastructure, is a big need. Uh, Countries like US have seen 90% penetration. India is at probably 4-5%, 6% penetration. So there's a significant amount of penetration required in this segment for it to scale up and to financialize these assets into a regulated environment in general. So I see the need and the thing very high, and likewise with time, investor protection would become more and more uh, probably more better for the investors as such. But again, very important that investors don't have a mindset that, oh, I'll come with the intention to double my money in a year, 2 years, 3 years. That's not the kind of product, unfortunately, this is. Very unlikely you will be able to double in such a short duration. It takes a 7-10 year kind of a mindset for you to literally double, triple your kind of wealth because the market grows accordingly, and it's not. I think yes, there may be outliers where suddenly a metro station gets announced right outside your property and then the prices shot up. But that's not a usual thing for all the properties. We have one such property as such where we've seen this spike, but we have 36 other properties where we've not seen any such spike as such.
Is this phenomena of fractional ownership going to be restricted to tier one or primarily business cities, or would you see it percolate down?
See, so honestly, the for any such platforms, there is if you want the best deals, you need to buy at bulk and you have to buy large volumes at such and at scale. There is inherent powers for you to do multiple things better, right? From a purchase power, from asset management, because the job is not about just acquiring. Our real job is managing the assets. Once we acquire the assets, continuing giving a good tenant relationship or a good tenant experience altogether to ensure they stick around longer or work together to find other tenants, etc. So I think the larger penetration of 92% odd would be your tier one cities only. And there will be a 8-10% kind of a penetration in tier two markets. We are there in tier two markets today. We have 2% of our portfolio in tier two markets as of today in Jaipur per se. But these cities are very promising. Their growth story is phenomenal. Investors should look at this. The only challenge is that, okay, I need to buy 1,000 crores worth of assets in Jaipur tomorrow. I might not get it. Vis-a-vis, in Bombay or a Bangalore market, it's just one of the buildings which are worth thousands of crores. Right? So scale is the real challenge as such. But having said that, for investors, they should look at participating in tier two markets. There is a good growth story in those markets, but obviously it has its own risks and challenges as well. In a nutshell, what SM REITs will do eventually is an IPO for a building. So it's very easy for you to see the building which is getting IPO'd, Google about it, know about it at any time. If you have friends, let's say you're in Bangalore, there's a property which is getting IPO'd in Bombay. You can call up your friends in Bombay, check with them how it is, go outside, check the property, who are the tenants, kitne log ja rahe hain, how many people are inside the property, not inside the property, etc. What is the movement like? Bunch of that kind of diligence could be done by investors in general before they decide to invest. As such, so that is the way it is. Again, like I said, you can start small and probably make it a large portfolio over a period of time for yourself. There is a lot of merit in this segment as such. Just that the mindset has to be it's a real estate investment vis-a-vis a financial approach to it, but it's not a financial investment. So do not have expectations that I'll want to invest in let's say the word today is Suzlon for the world. All your energy companies are doing well. I invest in that, or a defense company and they become 10x. You in 10 years are becoming 2x. Why should I invest with you? Absolutely, you should not invest with us. If your risk appetite is to participate and take those kind of calls, you're free to do it. But what I can always suggest is once you book profits from that, probably look at participating into safer assets like a REIT InvIT, over a period of time. So that's the way at least one should look at and should consider investing. But it's early days. You'll see a lot of segmentation, a lot of newer innovations in this segment. So even if you're not keen today, I would say keep it in your, keep an eye on it, keep all your ears on it, keep talking, keep listening to more such podcasts in general and keep getting educated because sooner or later you would make this a part of your portfolio.
It was lovely having you on the podcast. Thank you, Mr. Lodha. Thank you for your time.
Thank you. Thank you, Abhishek.